Hi everyone, this is Prachi. Welcome to today's episode of Fund Manager View. I have with me Mr. Kashyap Javeri. He's our head of research and fund manager. And I would love to know his perspective on markets, investing and fund performance. Hi Kashyap, how are you doing?
Thank you so much for having me today.
First half of 2025 has been there have been a lot of tariff wars, deals and ceasefires. So, amid all this chaos, how do you see, where do you see this heading?
So Prachi, at the outset, let me tell you, it's been a quite roller coaster year, right? First 3 months until March, we had markets tanking down, and suddenly April, May and June have been really, sort of benevolent to the market, right? And this is despite the fact that on April, in the first week of April, we had this huge tariff announcements coming from the most powerful man on the earth. I think the way to navigate through this kind of turmoil is to build a portfolio which is sort of exogenous, shock proof, right? And that's what our endeavors have been. For example, if you look at this financial year, particularly since April till date, broader indices have been up by about anywhere between 8.5 to about 11 percentage point type. If I look at my whole portfolio, that's been up almost about 16.5% or so, right? Until date. Touch wood, fingers crossed. Hopefully we'll pass the year with the same kind of performance. But like I said, you build a portfolio which is exogenous, shock proof. The portfolio has to perform on the basis of its own strength. Each individual company has to have its own fundamentals. And we try to build a portfolio of the companies where this kind of exogenous shocks usually can be absorbed much more easier than probably rest of the market. That's been the mantra until date since the beginning.
Okay. In that case, you will have to find companies which are not very export dependent.
Not really, because, so for example, we in our portfolio, we have a company which exports gears to United States also, right? And fortunately, what has happened is that they have been able to pass on the whole universal tariff, so-called 10% universal tariff that the President Trump had levied across the globe, right? Anybody and everybody. They've been easily able to pass on that 10% tariff onto the clients. Some of the auto ancillaries that we have spoken to have also been able to easily pass on that 10% tariff onto the clients. Many of the auto ancillary companies that we have in our portfolio also have their compliance with the so-called US-Mexico-Canada treaty, right? So there are goods which keep going back and forth between these three countries. They have been compliant with them, which means that at least for the time being, there is no big tariff on them. So I think, like I said, the idea is to build a portfolio of companies which are exogenous shock proof, and their own internal strength are so strong that they are able to pass on this kind of shocks back to the clients to which they supply their materials.
That's good. Geopolitics and supply chain realignment have dominated headlines again.
Yes.
How do you factor these macro uncertainties into asset allocation?
Right. So if you look at the portfolio of MK New Vitalized India Strategy, in short, we call it NV, right? This is neighbors envy, our pride, right? The idea is that we are trying to select companies over here who are still export oriented. We will not in a way say that, because there is global turmoil, there is oil prices shock, there is tariff shock, we will look at only domestic driven companies, because if you look at India, we are roughly about $3.7 to $4 trillion economy, but you have at least three more economies who are larger than us even today. And unless I have a company which services all these 3 or 4 larger entities in the world, I don't think I'm fully utilizing potential of my company, right? So we keep looking at that kind of those kind of companies. The idea is that, and again, I'll give you the same example of this gear manufacturing guy. Today, if you look at India, the market size of industrial gears in India is just barely anywhere between about $500 million to about $600 million. Would I invest in that company just with that kind of opportunity? I'm not interested, right? It's just too small an opportunity to be there. I would love him to go to countries like Europe. I would love him to go to countries like US, sell the product there, make a product which is better than his competitors even on that side of the globe, right? And at a cost which is probably competitive with likes of Chinese. And I think that's what that company is doing. And which is why if you look at today, even in this kind of scenario, their exports are growing significantly well. They are getting their order books filled up from European OEMs, right? So I think if you look at, if you try to replicate the same example on any other supply chain, we continuously keep looking for the companies which can replace their Chinese counterparts, their European counterparts, whether it is through quality or whether it is through the pricing, obviously quality being the most important part of it, but they continue to replace some of their counterparts from this economies in terms of manufacturing to India. I think, have we done that in past? If you look at the CDMO in pharma, we have done that. If you look at generics in pharma, we have done that. Right now, we are called pharmacy of the world. Today, if you hear our, commerce minister, Mr. Piyush Goyal, he wants us to become the auto ancillary hub of the world, right? That, anybody is looking at building a car, he needs to source the auto components from India. I think that's where there is an opportunity for shifting the supply chains from either Europe or China to India. I'll give you the second example again, which is the gear manufacturing company that I spoke about earlier. So I would not want that company to focus on a 300 million, 500 million or 600 million market, which is only India. I would want them to focus on economies like Europe, which is, probably a multi-billion dollar opportunity in industrial gears. I would want them to focus on US market again, which is a multi-billion dollar opportunity in terms of supplying gears. They have been winning contracts from European OEMs, and they have been able to pass on the cost which has been levied by the recent tariff war, right? So I think overall, where do we see Indians replacing the supply chain, and have we done that in past? One classic example is CDMO, the contract development and manufacturing of pharma. That's where we have replaced a lot of global supply chain. We have done that in US generics, again, where we are now called a pharmacy of the world. And if you would have listened to our commerce minister, he has already said that we want India to be the auto ancillary hub of this world, right? Any car being manufactured anywhere in the world needs to have auto components or auto ancillaries which are supplied from India. So we will continue to look at those companies. We are not going to be bound by only domestic consumption. What we will continue to look at is global consumption and the companies who can participate there. So I think supply chain shifting to India is a fact. It's been happening for a very long period of time. It has happened only for a few sectors until now. I think this is our chance to replicate that across various other sectors.
That's great. So India's market cap recently hit a new milestone. Are we finally entering a decade of domestic dominance, or do you still see global headwinds catching up?
So
I think you already answered.
So as you see, there are new IPOs which keep coming in every day, right? And we have new sectors which are getting listed on the exchanges, right? We had never heard that there will be a food delivery company which will be listed on exchanges, right? 2008-9 gives you an example of real estate was never part of our listed space. Yeah. Suddenly you saw a plethora of real estate IPOs coming in. I think as more and more sectors within the economy continue to participate in this public markets and raise money, we will continue to see the overall market cap of the economy hitting newer highs. That's a fact. It need not be driven only by the earnings or the PE of the market, but as new key companies keep listing in, obviously that's going to go up. And if you look at the new listings, the recent ones which have happened, all of them have been leaders in their own space, but we have never had a company from that particular sector listed ever on the exchanges. So as that keeps coming in, I think you will continue to see the market cap of the whole market continue to go up. I would not be worried by the fact that, a lot of people keep talking about the market cap to GDP ratio hitting X, Y, Z. I think each economy is different versus the other. The sectors which comprise of a particular index are different in each of these countries. For example, Nifty 50's composition is not similar to what S&P 500 is, right? So you can't do an apple to apple comparison there. They are as different as chalk and cheese. So I'm not worried. I think what will continue to see is that new sectors will keep getting added to the indices. They will keep getting added to the public listed space, and we'll continue to have our own party.
Yeah, so India's story is unique and we should celebrate.
Of course.
Yeah. So how do you see India fitting into this China plus one strategy of equity investment perspective? Are we just beneficiary of rerouting or something more structural?
So I think it's rerouting which is structural in nature, in the sense that until date, nobody would have, at some point of time, nobody would have recognized as a pharmacy of this world, right? We were not, but we became one. People are now recognizing our forte in the CDMO space, which is one step behind that generic, right? That we can manufacture we can, first of all, we can do the research on those drugs, we can develop those drugs, and we can manufacture them, right? So now people look at us from the patented drugs point of view also. Where were we in terms of auto ancillary, let's say a few years ago? We were never there as a part of global auto ancillary supply chain. Now today you have companies like Suprajeet, you have Bharat Forge, you have Motherson Sumi, you have maybe Sona BLW, right? We are now part of that supply chain globally. And usually when that happens, it's always structural in nature. If I'm Audi, or I'm Mercedes, or I'm for example, let's say BMW, I will not change my supply chain from country X to country Y until I see that, this is one model which I'm going to launch. It's going to be there for next 5-7 years in the market, and there is somebody who can supply the components for that particular model for next 5 to 7 years. It's always structural in nature. It can never be a cyclical, just because China is goofing up on something, people have shifted here. They are seeing value here, right? So I think that is going to happen in auto anch. I think that is going to happen in case of capital goods, engineering goods. It's already underway in terms of CDMO within the pharma space. I think it's a structural rerouting of supply chains globally from China to us. Similar thing, if I were to just give you an example, is happening in case of textiles also, right? People thought that Vietnam, Bangladesh are all, low cost manufacturing, let's do it there. Now people realizes that if you're looking at more stable, but not, exactly cost effective, maybe plus minus 5% here and there, India is the place to source. So I think that's going to happen in textile also.
Correct. So we are seeing a renewed focus on manufacturing with PLI schemes and Make in India 2.0. Are Indian industries truly investable again after years of underperformance?
So if I look at particularly Envy, for example, which is our product which is focused on, I would say anything which is not BFSI and not IT. It's now 3 years old product, and we are outperforming the benchmark by almost about 450 or 460 basis points. Which clearly shows that if you are building a portfolio which is focused towards a part of the economy which is going to be the primary driver of GDP for next 5, 10, 20 years, that's where money will be made. Right. I understand that manufacturing has not been the buzzword until COVID broke out. It became a buzzword after COVID broke out, because a lot of people realized that you can't depend on external supplies for everything that you consume. That, if you look at that thought process, that hasn't changed from either the consumer point of view, or from the government point of view, or from the manufacturer point of view. So incrementally, what is going to happen? Incrementally, whatever we consume here in India, we will try to manufacture those things in India itself. Our endeavor will be in that direction. Plus, you add the fact that whatever the world consumes, we want a part of that pie also, right? So I think if you look at next 5, 10, 20 years, this is where money will be made. I think people need to align their thought process in that fashion, that manufacturing is where money will be made. If you look at the flow of capital also, incrementally, more and more money we believe will flow into manufacturing rather than the services part.
So private banks have seen re-rating, while the PSU banks have surprised many with their turnaround.
Right.
How are you reading BFSI space now?
So for next about, let's say 12 to 24 months, I think if I were to put in hierarchy, I believe that non-banking financials will be in flavor, or they will be in favor. That followed by private banks, and that followed by PSU banks. I think the way private banks and the NBFCs have been expanding their overall network, right? Because if you look at banking, it's a business of, or rather not banking, but generally BFSI, the space as a whole. The business is about raising the money at the right price and lending at the right price. And within that, you make your spreads, which make sure that whatever NPLs that you have because of your lending, it's taken care of. I think almost about 10 years, the private banks and NBFCs have spent a lot of time in expanding their networks to raise the money at the right prices, right? So if you look at the deposit growth now for almost about last 10 years, private banks have been taking away significant amount of market share from PSU banks. I think that will continue for next about 5 to 7 years more. I think private banks will continue to gain at the expense of public sector banks. And like in case of any manufacturing, if I'm not raising the resources at the right price, if my raw material is not coming at the cheapest cost, and I can sell my product at the best prices with the best quality, obviously I'll continue to lose market share. So my belief is that over a period of next about 5 to 10 years, the PSU banks will again continue to lose market share. Private banks will continue to gain market share. Banking per se, if you look at last about 3 to 4 years, private sector banks have gotten significantly derated. PSU banks have gotten slightly re-rated. I think that is to reverse if you look at next about 12 to 24 months. So in the hierarchy, NBFCs is probably at the top, followed by private banks, followed by PSUs.
In a market where everyone is looking for multi-baggers, where do you find portfolios that are both aspirational and grounded in fundamentals?
So I think idea here is to find something which has got beaten up because of factors which were not in the company's own hands. And when that happens, you usually get companies which are at the right valuation, right? For example, we have recently added a company which is in the CDMO space, which we like a lot. The company got beaten down for a variety of reasons. The stock price actually almost from the peak actually gotten halved. Right, it was like a falling knife which we tried to catch, right? But we believe that
risky move.
it was a falling knife which we were trying to catch. But what we like about that particular company is that it's one of the largest CDMO companies. First of all, in India, they have aspiration to become the largest CDMO company in Asia. If you look at today, their plant is the largest CDMO plant actually in Asia, at a single location, right? So you do a lot of company visits, plant visits. So we went and visited their plants also. And we came back quite impressed by the kind of plant that they have put up for this, bulk drug manufacturing, whether it is tablets or capsules. We were quite impressed by their plant, which they have put up now on the injectables, right? And we said, okay, the company has been facing some issues because of some of the exogenous factors. There have been some internal decisions which have also not turned out so great for them. But the fact that if you're recognizing a problem, that's half solved, right? So we could clearly see that the management now understands what went wrong, and they are trying to correct what they have done wrong. So your external factors correcting, recognition of problems of what we have done wrong, and then gradually correcting those issues, and the stock price which has gotten half from where it was, right? We initiated a position, right? Similarly, there was a company in EMS space, electronic manufacturing services space. Again, there were some exogenous factors, some decisions which they took which went wrong. They could recognize the problem which they have or other decision which went wrong, and they started correcting it. And again, the stock price from the peak was almost half of where it was, right? And we thought that for EMS space, this is the valuation which I'm okay with, given that even after all this, the growth in the sector is going to be in 30s and 40s. We are now comfortable with these valuations. And let me be very clear with you. We have never participated in that EMS whole story because we could never find valuations which are comfortable. There was no FOMO feeling at that point of time. But we could clearly find a stock which was half of where it was. The valuations were now comfortable. The problems were getting resolved, and we initiated. That's how the whole process goes, that you try to find an anomaly which is available at the right price, and you initiate the position.
Okay. That is exactly opposite of BAP, which went wrong.
Yeah, exactly.
Good to know. So, what's a contrarian call you have taken recently? Again, you answered it, so I'm going to skip that question. How do you personally reset your thinking when markets turn irrational, either euphoric or fearful?
Actually, the idea is actually not to reset, right? Because whether it's euphoria or whether it is you are at the bottom, I think you need to be very clear in your mind that in either side you are not going to participate in an irrational way, right? So you don't participate in the market when it's euphoric, right? And you never participate in the market when it's at its bottom. Actually, you participate at those points of time with a sort of bit of a inverse action, right? For example, like I told you about that CDMO company, the whole market was getting rid of that particular stock, and you suddenly realize that the things for which or the reasons for which market is selling are actually getting corrected, right? So neither I'm being euphoric when everybody was buying the stock, neither I'm pessimistic when everybody is selling the stock. right? And that control of emotions on either side is generating the returns. So I think not to reset your thinking when the things have happened is actually the mantra.
Perfect. So you can't borrow conviction. You have to have your own very strong conviction.
Absolutely.
I'm happy you guys have it.
So my old boss, I mean, this was like almost about 22 years ago. My head of research used to say, to buy a stock, you need only two things. One is cash, the other is conviction.
Correct.
And once you have those two at the right time, you don't need to reset.
Yes, perfect. So, thank you, Kashyap, for a very insightful session today. So, for more such insightful sessions, keep watching. Please like, share, subscribe, and watch. And stay bullish. Thank you.
Thank you so much, Prachi. Thank you.